Hey everyone, welcome back to Corporate Decoder. Today's RFM just filed an 8K about a NYSE delisting notice and a stockholder meeting, and I'm seeing a couple of major red flags. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is facing delisting from the New York Stock Exchange and also just held its annual meeting where shareholders voted on key company decisions. Alright, let's dive into what is happening with Surf Air Mobility Incorporated. This filing is an 8K, which is like a special report for big company news. Today we're looking at a couple of important things that happened on the 24th of July 2026. First off, the company held its 2026 annual stockholders meeting. Think of this as the yearly check, in where shareholders get to vote on important company matters. They had about 100 million shares of common stock out there at the time, and everyone who owned stock by May 26, 2026 could vote. At this meeting, shareholders voted on a few key things. One was electing new members to the board of directors. Tyler Painter and Sadhin Shahani were up for election as Class C directors for a 3-year term. It looks like both of them were elected. For Tyler Painter, nearly 29.5 million votes were cast in favor, with about 5 million withheld suiting. Shahani got a bit more support with just under 30 million votes for him and about 4.6 million withheld. There were also a significant number of broken non-votes, which means the brokers didn't receive instructions from the beneficial owners of those shares. Another crucial vote was to approve PricewaterhouseCoopers LLP or PwC as the company's independent auditor for the rest of 2026. This is a standard but important vote to make sure the company's financial books are being checked by an outside firm. The shareholders overwhelmingly approved this, with over 59 million votes in favour and only about 1.3 million against. This shows a strong confidence in PwC auditing the company's finances. Now this next vote is a big one. Shareholders also approved an amendment to the company's charter to do a reverse stock split. This means they are going to combine existing shares into fewer, more valuable shares. The ratio can be anywhere from 2 new shares for every 1 old share up to 6 new shares for every 1 old share. This is typically done to boost the stock price, often to meet exchange listing requirements. The vote here was quite close, with about 54.9 million votes for it and 9.4 million votes against. This suggests some shareholders might be concerned about what this means for the company, and this leads us to the most concerning piece of news in this filing. On the same day, the 24th of July, Surf Air Mobility Incorporated received a notice from the New York Stock Exchange, or NYSE. The bad news is that the company is no longer in compliance with the NYSE's rules. Specifically, their common stock's average closing price has been below $1 for 30 consecutive trading days. This is a pretty common reason for companies to get a warning from the stock exchange. The good news, if you can call it that, is that this notice doesn't mean they are delisted tomorrow. The company has a period of time, 6 months, to get their stock price back up above $1 and keep it there for at least 30 days. They have to tell the NYSE within 10 business days that they intend to fix this problem. They can regain compliance if, on the last trading day of any month during this cure period, their closing share price is at least $1 and their average closing price over the previous 30 days is also at least $1. Looking at past situations like this, companies that fall below the $1 threshold often struggle to recover. For example, Kodak faced a similar situation back in 2021 with a reverse split and their stock continued to decline, eventually leading to delisting. History suggests that a significant portion of companies undergoing reverse splits to meet listing requirements end up delisted within a few years. For a hypothetical $1,000 investment in companies in this situation, it is not uncommon to see losses of 50% or more in the subsequent year. The company has also issued a press release about this notice, which is included as an exhibit. This tells us they are acknowledging the situation publicly. This section just lists the exhibits that come with the filing, like that press release we just mentioned. So, what is the story here? Surf Air Mobility Incorporated is facing a serious challenge with the NYSE because its stock price has fallen too low. They're trying to fix it with a reverse stock split. But that is a move often seen in companies struggling to meet basic listing requirements. The fact that they are actively trying to boost their stock price suggests they know they need to get above that dollar mark. What I am watching closely is whether this reverse split is a temporary fix or a sign of deeper issues. The close vote on the reverse split indicates some shareholders might be wary. Historically, companies in this exact spot often face difficult times ahead. My biggest concern is that this NYSE notice is a symptom of underlying business challenges that even a stock split might not solve. What I am actually looking for is a clear plan beyond just boosting the stock price. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, hit like and subscribe and join our Discord for more insights.